Okay, we're here with Aaron Weber, Sales Manager at Landmark Insurers, and we're going to talk a little bit about property and casualty today and get to know him a little bit better. So let's jump right in. What, just in general, what brought you to property and casualty as a profession?
Well, a lot of times in the property and casualty world, it's a small world. When you go off to college or you're in high school, no one says, well, I want to become an insurance agent. And so you kind of have to have family in the business, and really that's where I got into. It was my father had an agency. We both partnered to go into this agency together, and I got into doing regular personal lines, and then I advanced myself into doing the commercial type work, which takes years to be proficient at it. It's not something that you can just start dabbling in and figure it out.
What kind of changes have you, so how long have you been in it in
10
total?
years.
You've been in it 10 years, so you've seen a lot of changes, I'm sure, as with
Especially
every other industry. What have you seen that's really stood out?
Well, the volatility of the market. Most states, it's pretty plain Jane, but in Florida, it used to be where I had a client today ask me, their premium went up on their auto, the commercial auto, and they haven't had any claims or anything like that. In Florida, you used to have a company for 10 years, or if not longer. Now it's every 3 years that your rate will go up.
Right.
Depending on your commercial, depending on your commercial auto, your rate will go up in some form or fashion. And it's our job here in the state as professional agents to pretty much, we're not really loyal to too many carriers. We're more loyal to our customers, and picking the appropriate coverage, the appropriate company, and having, because we are an independent agent, so I nearly have 350 insurance companies that I represent. So I can find, pick, tune, whatever they need. If they have that rate increase, that coverage difference, we can pick that out for them.
And when you're talking about commercial, I assume from a customer standpoint, you're talking about probably small or tightly held businesses, a lot of family businesses. This commercial coverage has a real impact on their bottom line, doesn't it? As you're saying, as if rates go up, and really it becomes a real line item expense. I mean, is that something you, as a professional, keep an eye on for them? Is it a major concern of theirs? How do you sort of work with these commercial accounts just to make sure you're really looking after their bottom line, aren't you?
Yeah, and the one way to look at their bottom line is, we represent all top major carriers. They're all competitive in what they rate. It's finding the proper coverage and letting the insured know what's the best coverage, because we're all going to come in the same bottom rate. And then with the commercial world, it's so tricky for a business owner, because an agent can cut so much out of the policy, unlike a homeowner's policy where it's pretty much standardized by the state, and that coverage is what you get. You can add some frills, but you can't.
Contents.
You can't really take much away. But a commercial policy is very much different. So you can actually really cut to basic coverage, excluding wind, and the policy is very cheap. So what I do is I give my customers options. So I go and I say, hey, this is the basic. This is what you get for basic. Then you have your mid-level, and then you have your high-end. I do a lot of work with commercial condos. I also do like specialty niches with tree trimmers, and they want certain coverages that protect them. Not all businesses can afford the Cadillac of policy. So you start basic and you let them decide, but the important thing is to let them know what coverages they have.
You don't want them undercovered.
Exactly, and that's very common in commercial insurance that these insurance carriers, they exclude a lot. And in Florida, unlike other states, we deal with a lot of surplus lines. Most agencies' books are about 80%, probably 70 to 80% surplus lines. Surplus lines cut. They're more expensive a lot of the times, but also they cut coverages a lot of the times.
And what can that do to a business? I mean, if they're underinsured.
Perfect example here. Around here locally, the biggest thing that I see are properties, people that own businesses and properties, and they exclude business income and extra expense. They have a fire, they have a storm comes through, even minor damages could put them out of business.
Protect the cash flow.
Yeah, and pay their employees. That's one of the biggest things that a lot of people don't add on to their policies. And we have special programs now that have come back in the state that write a BOP type form, throws all that in there. And it's similar to a homeowner's package. But for years, the last 5 years, it's all been surplus lines, excluding those types of coverages. and we're just starting to see where companies are willing to come back and offer some coverages. But that's only a short amount of time until we have another hurricane, and then everything's going to be pulled out again.
How is it, we were talking earlier, and I know you're from Illinois now, what are the things that, do you deal with a lot of people that bring a business here or move to Florida, and why is Florida so different, and how is Florida so different? What are the real, from an insurer's point of view, what do customers need to keep in mind? Obviously, is it all weather related? I mean, what do you see just in this state that makes it unique?
Well, let's start with, say, liability. Premiums are very similar to any other state in the liability format. The only difference is, because Florida is a transient state, we have other people that are coming from other states coming down here doing business, and possibly not doing business correctly. So what happens is that, say, like in Illinois or Michigan, you don't have a lot of people traveling there from out of state doing business.
Just passing through.
Yeah, and so what happens is, the liability standpoint, it's made it a little bit more difficult in the artisan contractor world. Higher risk. People, they're very leery, kind of similar to maybe California. They have the same issues. Our biggest problem, though it dictates a lot of the premiums, are the property, when you own property.
Okay.
And just like the homeowners, on the commercial side, property's gone extreme. If it's near water, there's extremely limited carriers that do that compared to, I can tell you right now in the Tampa Bay area, there's probably 3, depending on the area, maybe 4 to 5 tops of admitted carriers that'll write property in the Tampa Bay area. Well, the rest are all surplus lines. And the age of the building, they want pretty much cookie cutter clean risk, so newer buildings, away from water, things that really
hard to find in Florida sometimes.
And the problem is a lot of people have built near these areas that are prone. And we're talking right now with the flood costs. The flood costs are huge. I've done some expos right now or seminars where I've told people about that. I've had PowerPoint presentations to explain the differences between pre-firm and the post-firm, and the 25% increase for businesses.
Break that down a little bit. What does that mean to me? As a pre-firm, post-firm, what is all that?
Pre-firm was 1974.
Okay.
Usually, I like to use that breaking point right there. It got a lot of credits. It's pretty much grandfathered in.
Okay.
Anything newer than that was actually rated at current levels, and they're going to see an increase as well, but the major increase are going to be the people that were getting those subsidized credits from the federal government. So they're taking those away, and they're incrementally changing that. Now, us agents, it's been very difficult it's a federal program, it's the government, so I've gone and done my research, and from my own carriers, their percentages on the basis are variable. It might say 17% or 11% here. It's variable. The only way we can really tell is if we have the EC and we take it to when we do the quote. It's very simple. We get the EC, we do the quote, and that's a definitive answer right now. To look out into the future, I've had realtors who've wanted me to look out into the future. Where's my floods map? Where is it going to be? I can't tell you that.
Because you could be looking at uninsurable property at some point in the future.
It could be, yeah. It's changing, and it will change. And the government is trying to make money off of this as well. Not to get back to where we are more financially. The program's sustainable.
Because it becomes so costly when there's a natural disaster, and we don't have the funds to sort of recover, so the model changes, doesn't it?
Very much so. And so to project that is just like saying, well, I don't like to project. I like to give it a definitive answer. And, one of my things is, I don't know everything on insurance, and nobody does. But I have a core group of underwriters, people that I know that have been in the industry 50, 60 years, that I can discuss things with, and I go to my clients and say, well, you know what, I don't know the answer. I will find out, and I'll put it in writing what I do know. And a lot of times I find out where, other clients and stuff like that, somebody's just spit off an answer that looks smart in front of someone, which, I've found out it's best to give the right answer and just say, hey, I don't have it right now, but I can find it for you, and I know it's 100% when I give it to you.
Yeah, because all of these, it's too sort of complicated for everyone to have the answers. It would be impossible.
It is very much so. be very leery
Yeah.
whenever you're talking with a property and casualty agent who seems to know every single thing, because unfortunately it is extremely difficult, and each carrier has their own little quirks and things that can change certain ideas or how things are written. So it's best to always just confer with the agent, to confer with their underwriters as well.
Sure.
Get that definitive, because an agent, we go to school, we study and everything else, but we're not the underwriter.
Who's the final decision maker?
Yeah.
Outside of the commercial lines, talk to me a little bit about home and auto, and sort of how Landmark differentiates itself. And those are, from an outsider's point of view, which is what I am. Those types of policies seem very sort of cookie cutter. You can almost go online, and it seems like that sort of environment. But tell me from your
You're totally right. They are cookie cutters,
Yeah.
in my viewpoint, and I train our agents to go outside that box.
Okay.
People look for prices. Well, we're going to find you the price. Okay, we all know that. It's on TV every day. But what our agents are able to do is to look at that cookie cutter policies and find some of the nuances that are changing per today. We spoke with one carrier that it's really their forte is not families. They like single people, single vehicles. So
Really?
yeah, so it just depends on what they're marketing, where they're going, what they
see in
their
the
claims
industry.
and things like that. So what our agents are doing are they pinpoint the type of insurance, they look at the carrier, how financially strong they are, yep, and how. One thing too is that what I stress to them, like I said, every 3 years it changes. So if we find a carrier that is more relaxed and say, they might have the same price as this other carrier, but incrementally every year they might go only up $20, where the other carrier will go up $300.
So you found a pricing trend with certain carriers, which
Exactly.
is critically important. And a consumer like myself is never going to be able to see that or have the access to the history of each company to see that kind of you can really kind of trend out and predict out and say this is how it's going to sort of impact you in the future as a consumer, that's invaluable.
And our agents, insurance is a relationship business.
Right.
You are friends with your agent. You do business with people that you like, and we relate with our clients. We become their friends over years because we're dependable. It's the same. Everybody says that we're dependable. We give the best service out there. I like to kind of give an example, or if you will, I'll say whatever you want me to hear, but I'll show you what we can do.
Right.
That's really my forte, and that's what I teach. I come from a small little farm town, and if everybody told that they do everything, then, and you don't deliver, you're out of business probably within a day or two.
You're not coming back.
So I've brought that small town mentality
Yeah.
to my businesses that I've been through and to the Tampa Bay area, and I teach that to my sales staff as well, that you're accountable for what you say, and
Right.
you deliver when you know you can deliver. Do not overpromise, and you'll have clients for life because they trust you. They know you're not selling them. You're only giving them what they want.
Right.
And protecting them. And that's what our job is to protect. Because I believe in insurance.
Yeah.
When I see a lot of people say, well, I haven't had a claim in 20 years. Well, you know what? You're right. You haven't had a claim in 20 years. But they are not in the insurance business where I had just had 6 claims from 6 clients of mine in the last week. Okay,
because that's how the cookie crumbles.
It is. It's a gamble. It's
Right.
all a gamble, So it's just finding out really what they want, giving that to them, and having them understand what they're buying.
Yeah, and I'm sure like insurance is not the most. It's not like going to buy a new Corvette. It's not the most fun thing to go buy.
It's very
And I'm certain you get a lot of people that come in. I just want to get this over with. Just give me something. And that's really, you kind of got to handle that with kid gloves, because you got to tell somebody like that, like you just mentioned, you've got to protect them. That's what they're there for, is to get the maximum protection for the price that's within their budget. I mean, Do you get, there's probably two types of people. You probably get that type of person, the other person who says, I want the best coverage, I want to ask a lot of questions. But how do you handle somebody who goes, I hate buying insurance, I know I have to have it.
You know, being in the business 10 years, there's actually probably 6 or 7 types of people.
Specific.
That you can, and they blend into each other. Someone who asks all the detailed questions, or someone that, you know, after about 2 seconds, their eyes are rolling in the back of their head because you're going into too much detail. You know, it's the relationship, understanding who they are.
How to talk to them.
And it's simplifying. I've learned that over the years that, you know, it's taking that long definition and simplifying it into some short words that anybody, that you give it to them, and if they want more detail, then you give them more detail. But you pretty much go over the basics, the exclusions.
Yeah,
that's
a lot of people
enough.
don't know that they're not putting it into perspective what an important decision it is, because they haven't had a claim in 20 years, or they haven't had the business that long, or the car, or they're a younger driver, or this is their first home, and they just don't really. So you kind of really, it's important to have somebody like you in place and your team to say, let me give you some perspective on what it really means to have the right homeowner's policy or the right commercial vehicle policy for your landscaping business or whatever it might be. So you're kind of educating at the same time, aren't you?
Well, very much so. And when I go over an application with a client, you know, I kind of go a little bit, we go over the standardized, the coverages. Well, the problem is most people understand, well, this covers, okay? This is the coverages, right?
Right.
What's excluded? When they have something, you know, the water
just as
damage,
important.
It's actually more important, I feel, because the reason why I feel that is because in the end, they're going to say, well, I sat down with you, hey, Robert, these are all the things that are not on this policy. Okay, well, I know I can't do any of these things. Instead of saying,
it's not going to be a surprise.
This is you've got $1 million, $2 million on general liability. That goes, you know.
That's all they hear.
Yeah. Well, you're not covered. Yeah, that's to them. That's
a big
nothing.
number. Okay.
Yeah, you know, that's Thank you. Okay, great. Well, you know, it doesn't cover you for punching someone.
Yeah.
Okay. It doesn't cover you for silica or nuclear or things like that. If you outline that, and I always use special form. You know, I don't nickel dime. It's not worth it. And in the commercial world, you use special form on everything that's possibly can. And
which means it's almost a line by line sort of.
Yeah, it's special forms. It's in the simplistic form. It includes everything except specifically stated in the policy that's excluded.
So it's there.
So it's there. Gotcha. So it explains to you everything's covered besides what's excluded in the policy.
And here's what's excluded.
And that's where I go. Where I think I go above to explain, because I've had so many people come to me. Well, no one's actually went to the page. I'm like, you have 100 pages here in a commercial policy. No one's reading all that. Well, what we do is I go, hey, we just go to page 6. There's all your exclusions. Important. We go over the coverages, but that is, to me, I stress that even more. The exclusions, that's what we need to remember, what you can't do.
Sure.
And a lot of people, they don't look at it that way, but I try to reverse I challenge them. Most people sell a product, and they don't challenge them. They just, here's a platter. Now you got to be careful. You don't want to offend them.
Right.
But
you don't want to lose them either.
Yeah,
but.
so there's a fine line of being able to challenge them to understand that they want something better for their business.
Yeah, you should be participating in this decision, is what you're saying to them, not just, like you said, having your eyes roll back in your head and not understanding anything.
Yeah, and it does. The problem is, it's still, even if you do challenge them, there's just guys out there. Okay, a landscaper is not going to give 2 shits.
They love to stick their head right in the sand, don't they?
Our painter. But it depends. Now, the large painter down the road who has a management and administrative staff, they care.
And who's had claims and who's had experience and seen someone fall off a roof or whatever.
Yeah, really, and they have. It's you find out over the years that it's the people that in the property casualty world, the people that like insurance, okay, they are the people, or like insurance, that understand insurance, the value of insurance, are people that care about their business, that have been around, and that have some growth to them. They don't have to be quite large, but when I look at it, they usually have 3 to 4 employees, and then that's the minimum breaking point of people who really want
the business of value.
And now I have other accounts that maybe have 1 to 2, but they can't afford all that other coverage. They still care, but they just can't afford
What do
it.
you do for them?
Really, what I do for them is I give them the basics, what they need to survive.
Okay.
I started out when I insured these, when I was small, very small commercial, very small accounts. I mean, I have a personal lines background when I first started in the business, and you know, I care about just the small guy as much as I care about the large guy. And sometimes the large guy can get convoluted. You know, you're not dealing with one person. It's not that so much relationship. It's more procedural, and it is what it is.
You're taking care of an organization.
Yeah, and it can get, you know, it's not nearly the guy down the street that if they had an organization, yeah, a claim might hurt them, but it might not take them completely out.
Right.
And
They
this
can absorb it potentially.
this other guy, he gets a claim, and he's a small man, one-man shop, and he gets a big, he gets a big claim on his GL. You can pretty much tell him that you're not
unless can't absorb it.
Yeah. So you know, really, with the small guys, I give them what they need to survive. I give them the options. I tell them what their other coverages are out there and what they could possibly look at, because that's part of my job. That's what they need me to do, and it's, you know, by not doing that, it's a disservice to just assume that, you know, they just want the basics and that they don't want those other coverages. So it's my job to give them the basics, just like I do every other client, but I give them the particulars of what they can add onto the policy, because it is a la carte. Commercial is a la carte.
Which makes it that much more of a complicated consumer decision.
Yes, very much so.
You know, it's one of those buffet menu kind of things where probably people's heads spin a lot of the time.
It does. In other states, not so much, because it is standardized. There are a lot of policies out there from the standard admitted markets that are more vanilla. They still have their exclusions, but Florida is a surplus line state, and that gets scary. Now, a lot of claims that are denied are a lot of times because either the agent did explain to the insured the exclusions, they had no clue, or, you know, it just happened. It is what it is. They didn't do what they were supposed to do. But if you explain to the insured, this is what's not covered, and then all of a sudden you have a claim in the end.
Yeah.
You know, they
it
go,
comes
well,
back on you.
Yeah.
Yeah. Well, tell me a little bit about Landmark. What's the business philosophy going forward? What's important to the business? What's important to you?
The most important thing to me is educating our clients.
Okay.
That's what we're about. You know, money comes in the end. We're all about here. We got to take care of our families. You know, I've got another baby on the way. I've got to take care of my family. But you know, by educating my clients, by keeping them alive, and through good times and bad times, they understand what they're buying. There's no, you know, gray areas, and I'm helping them out. Our philosophy is to educate, to make sure they're getting what they want, and they know what's out there, and you know that at the end of the day, they know that they can trust us. That's simple relationship business.
And that's what keeps the relationship alive, isn't it? That sort of upfront openness, honesty, and trust. That's the only thing will build trust, isn't it?
Yeah, I might be a little bit too upfront with people. They know when they get where they get with me.
Where they stand.
You know, I'm not going to sugarcoat anything. I have no need to.
Yeah.
And I've lived off that for years, you know, being from a small little farm town, you know. It is what it is, and I'll do my best for it. And if that's not good enough, well, that it's, you know, you go find someplace else that might help you a little bit better, or I don't know. I mean, really.
Right.
I've never really had. I don't have an answer because it hasn't happened really.
I think the answer was perfect. I think education is what people want, and they know what they're going to get with you guys, and that's going to be really expectations will be met when you know what they are going in, and that's critically important to people. Critically, and people are they want to know that they have a relationship that can last. That only happens through trust. So I think you're absolutely going in the right direction.
Well, I appreciate it. Thank you.
Well, Aaron Weber, thank you for joining us here, Landmark Financial, and we will see you next time. Thanks.